Okay, guys. So once again, welcome to this hello once again. Welcome back to Dr. B's channel. You're with the strategist ethics. So quickly, we're going to be talking about characteristics of liquidity. I remember on the previous session, or one of the sessions, we talked about types of liquidity, and I said we're going to be talking about or looking into the reasons why um, a major liquidity is classified as a major liquidity. Okay. Now, first, I need us to understand, just like I said, we're going to be talking about characteristics of liquidity, but we might not be talking about them all in this session, just probably just quite a few. Now, first, under the first characteristics, we have what we call hunt of liquidity. We have what we call what? Hunt of liquidity. For a major liquidity to be classified as a major liquidity, it must have certain characteristics, okay? Certain characteristics. Now, quickly, just as I said, we're not going to be doing too much. So quickly, first we have this. Just as I said, we have one fund of liquidity. Okay, fund of liquidity. So fund of liquidity. Okay. So now understanding is one of the things you need to understand. Just as I said, that one of the reasons why an area is classified as hunt, yeah, I mean classified as a major must have certain characteristics of liquidity. Now, so on the first list we have hunt of liquidity. Now, let's say right that the market specifically is in a downtrend. Okay, so we're going to be drawing this structure being our probably 4 hours time frame or our or 1 hour time frame. Okay, the 4 hours or the 1 hour time frame. Now it's believed specifically that on the 15 5 minute time frame, we're going to be having smaller structures here. So smaller structures is this where the market will create series of higher lows, higher highs, higher lows, higher highs, higher lows. So I'm saying this structure here is formed right on the 15-minute time frame. So let's say the market in itself, right, creates a high and gives us a break of the structure. Now, this is the smaller time frame, okay? The smaller time frame. Now, as a trader, it's believed that you would expect that the market should always return back to an area of interest, right? To an area of interest. So let's say that we expect the market specifically to come back up into premium somewhere around here for mitigation. Okay. Remember, we're talking about hunt of liquidity for mitigation. Now, I also likewise want you to understand that hunt of liquidity is not expected, or it is not it's not, if I should use the word expected, it's not something you have to expect. Okay, it only happens when there is weakness. Okay, the market can always choose to do this. The market can quickly come back, probably do that pullback here, then return back into POI and give us a quick move. Okay, so you're not expecting a amount of liquidity until you've seen weakness. Now, I'm going to classify that or what I actually mean by that. So we're expecting that the market in itself, right, to give us a pullback and quickly dive into this POI. Okay, so we're expecting the market to dive what into this POI. But now you notice that the market doesn't mitigate from the POI, right? Neither does it take a certain level of importance, which is this high, right? That formed after this first break of the structure at primary point of interest. Now, notice the market then creates a low, right? That fails to break structure. I repeat, that fails to break structure. Fails to break structure. Now, I've said this that most times the market could just create this and break structure below. Okay, create this and form structure below. Now, when you know its weakness, it's when the market, right? Remember that this high, this area did not mitigate POI. Now, notice, right? The market, this high created this low and has failed to break structure. I repeat, has failed to break structure. Now, what do the market then do? The market now starts returning back to the range. Now, so many traders want to decide the fact that we expect a sell case scenario. Now, for me, each time the market returns back to the 80-90% level without breaking structure, I always want to see the market what? Right above that high, which is this. Now, this high is going to be seen as weakness. This high will be seen as weakness. Why? Because this high created this low that failed to break structure. Okay, so the hunt of liquidity is anticipated when the market fails to break structure and returns back to 80-90% of the previous range. So once the market does that, expect that this high will be rated. All you'll be expecting is that all you want to see is that the market continues. Okay, that's for hunt of liquidity. So hunt of liquidity only hunts just one high. Now the next one, which we'll consider as the last one. So that's the last for today. So we're looking at what we call stop hunt liquidity. Stop hunt liquidity. Stop hunt what? Stop hunt liquidity. So we're going to do the whole concept. So we are saying, we're assuming that this is what? This is our 1 hour time frame or the 4 hour time frame. Okay, the 1 hour or the 4 hour time frame. Now the market does this, creates series of highs, creates series of lows, creates series of highs, right? That's creating higher highs, higher lows, higher lows, higher highs, right? On smaller time frame. So we're seeing structure is smaller time frame, right? Why the dotted line specifically is our 1 hour time. So the market breaks structure, right? Gives us a high, gives us a low, the high, gives us a low, give us a high, gives us a low, give us a high, gives us a low. Then we break the 1 hour structure, which is this low. Okay. Now we still anticipate the fact that, right, it's almost the same case scenario, which is the stop hunt liquidity, right? So the market has a POI, it needs to mitigate from. Then we create a little bit of distance, a little bit, yeah. Then the market is just this pullback, letting us know we are ready, right? Now, all of a sudden, the market returns back, but fails to mitigate the POI, then does something like this, comes back again to this high, still fails to rate the previous high, right? Fails to break structure likewise. So these both highs are likewise weak. So the market does this, comes back and sweeps automatically. So this is considered as what your stop hunt liquidity because it hunts two highs. Okay, as simple as the structure is, right? You always see it happen. You always see it happen specifically, almost all the time. So that's that for hunt of liquidity. Now the question is, can we spot it? Can we spot it? Yes, we can. Okay, so let's quickly. Now notice we still have this to be classified as your hunt of liquidity, which is this, right? That's the amount of liquidity. We have the high that fails to break structure. The market comes back, strips it, then we continue, right? That's a hunt of liquidity. The market does this whole hunting, then rallies to the upside. Okay, rallies to the upside. So let's look for a few more examples. Let's look for a few examples. Now we have one here. Now notice that we had a break of the structure, right, from this low, right? We had a break of the structure from this low, right? Then we have this whole mitigation. So mitigation around this POI. What can you see? The market creates a high, right? Creates a low that fails to break structure. The market comes back, weakness. We can find weakness. The market comes back, right? We've not seen any formal break of the structure that actually happened. The market came back, mitigated POI, which is around this perspective, then continued, right? Where can you see? Where can you spot another hunt? That's another hunt of liquidity, right? That's another obvious hunt of liquidity. So let's look. Let's still go down. Okay. So that's specifically hunt of liquidity. That's specifically hunt of liquidity. Okay, so right about now, notice this, notice how well the market coming, notice how well the market creates a high, right? That creates a low, that fails to break structure. What do you see the market do? The market came back, punted it, then we broke structure, continued, right? We broke structure, then continued. So, ladies and gentlemen, that is that for hunt of liquidity and likewise stop on liquidity. So, I wish you good luck and good trading.